Hi, this is Dawn Connors at Mortgage One. Happy Monday to you. So today we are talking about private mortgage insurance, PMI insurance. What is it and how does it impact your payment? So before we get started, if you are new to this channel, I would love you to subscribe to it, and please feel free to share out my video to those who you think would benefit. I do mortgage videos every single week, and so there's some great information about buying a home, refinancing a home, anything mortgage credit related is in this channel. All right, let's get started. So PMI insurance stands for Private Mortgage Insurance. It's a fee that you pay every single month when you don't have enough down payment to get out of PMI insurance. You work out of PMI insurance on a conventional loan once you have 20% down or you have 20% equity and can prove it by an appraisal. A lot of people get confused and they think that when they call for an interest rate, they're getting the lowest payment and the lowest interest rate, and they're just comparing one interest rate to another. But that is oftentimes not true, because private mortgage insurance has a huge impact on payment. If you can think about it mentally like this, PMI insurance is multiplied over an annual basis and then divided by 12. Taxes are the same way, property taxes. It's spread over 12 months, right? Monthly PMI insurance, monthly taxes. So a mortgage is spread over 30 years. So the difference of a 0.5% in interest rate, for example, is maybe $50 or $60 a month in a payment on a couple $100,000 loan, where PMI insurance can have a huge impact on your payment. So it is vitally important that you understand PMI insurance and that you work with a lender that has given you multiple scenarios. At Mortgage One, my team and I, we make it mandatory process that we give minimal of 3 to 4 scenarios with PMI, without PMI insurance, with government loan, without government loan, so that you can see the options and what is the absolute best for you. If you call into a call center, I'm doing a shameless plug for myself, but I think it's important that you know this. When you call into a call center and you say, okay, I want to know your interest rate on your 30-year fixed rate mortgage, and this is my credit score, and this is my down payment. If you give that information and that's what you request, more times than not, that's what you're going to get back. Just the interest rate, just the payment that you've requested. They won't give you tips and say, hey, let's sit down and talk about this more. How about we do an appointment and go through what all of your options are? So that's what I pride myself in, is giving you thorough options. And I want to caution you about just calling in and saying, I just want to know what your interest rate is, because really there's a lot more than just the interest rate. There's a lot more that meets the eye. So let me give you another example. So 680 credit score, your PMI insurance would be about $200 a month. If your credit score was 760, your PMI insurance would be $98 a month. That's a huge difference. It's a $102 difference a month in a payment, just variance on your credit score. So the question becomes, what is my credit score? Do I have the ability to get to the next bucket? What are the buckets? So the PMI insurance buckets run in 20-point increments: 680, 701, 721, 741, 761. So your goal is to move up the PMI, the credit score range, so that your PMI insurance will move down in range. The other thing that you should know is PMI insurance isn't the same no matter how much you put down. It varies on percent down. So if you have 5% down, it's higher than 10% down versus 15% down. And of course, on a conventional loan, there is no PMI insurance at 20% down. So down payment matters and credit score matters. And sometimes with a really high credit score, you could put 3 or 5% down and your PMI insurance is minimal. The key is knowing your options, working with a lender that gives you those options and talks about those options. You can have no PMI insurance on a conventional loan. You could have half PMI insurance on a conventional loan. You can have regular PMI insurance. It just really depends on how long you're going to stay in the home, and then what your credit score is and what your down payment is. One more thing before I let you go, and that is an FHA loan. An FHA loan is a government-backed loan where everyone gets the same PMI insurance. If you can think of it like this, it's government, so everyone gets the same, versus conventional, you're highly rewarded for credit scores and highly unrewarded for lower credit scores. So I would say if we call lower credit scores would be that 680 rung is about the break-even point for conventional loans. So when your credit score is under 680, it is less expensive for you to finance your home FHA, because the PMI insurance is the same no matter what your credit score is, and FHA has better interest rates when you have lower credit scores. It is almost impossible to finance well a conventional loan with, say, a 660 score, and you can get some great interest rates and great PMI factors on an FHA loan. So this is what I wanted to convey to you today and really help you understand it's not just about the interest rate, it's a comparison between the interest rate and the PMI insurance. One example, I had a man come to me who had a 717 credit score, and he had a pre-approval with another big bank, and he wanted to know what the interest rate is and wanted to know if I could beat Chase's interest rate. And I sat down with him, I said, your problem isn't your interest rate, your problem is your credit score is 717, and if it was 720, your PMI and interest rate would drop to this, and if it was 740, your PMI and interest rate would drop to this. And I ran a credit analyzer for him and told him if you pay down these 2 credit cards by about $500 in total, your credit score would be over 740. So he did that, he got his offer accepted, and he got that credit score of 740, and we were able to lock in his interest rate based on 740, not 717. So pretty fascinating stuff. That's what I help clients do, is get the lowest payment with PMI insurance, with interest rates based on their credit score and down payment scenarios. This is Dawn Connors at Mortgage One, providing fantastic mortgage solutions. Thanks for watching today. Have a great day.